I'm live. Look at me. Wow, we're awake. Holy cow. Look at me. What am I drinking? Coffee or something? Good morning, everybody. I hope you're well. We are coming in at 8:30. Give me one moment because I want to pull our data set from the jobs report. And I want to see 115,000 by April. That is a pretty good number, to be honest with you. But we need to dive into that momentarily. So let me pull up what I need to pull up. I hope everybody's doing well. We're going to dig into a couple of things today. This is going to go probably 30. Probably not going to have a ton of time for questions today. I hope you understand. But really, the key thing that I want to dive into, two parts. One, heading into the weekend, I want you to think a little bit about this IPO that's coming up. I didn't know if you knew this, but there's going to be an IPO. And SpaceX, this is wild. And people kept saying, hey, do you have an opinion on this? Do you have an opinion on this? And you know how I work. I tend to not dive into something until I really have to, because I'm usually watching the ongoing liquidity moves in the market. And yeah, I got some opinions on this. So we're going to talk a little bit about that. I'm going to let everybody kind of get in here. Good morning, Florida. Man, do not rub that in. The Orioles are just a disaster. What else do we have here? This is loading still. Okay, so we'll do some numbers real quick, kind of reaction to this jobs report, which we're up, 0.5% on the morning? Not too bad, not too bad. 735. Very overbought, but the MFI continuing to showcase that we are in lighter volume. This is the hated rally. This continues to roll. We'll see how it goes. But right now, futures as we kick into the day, nearly 50,000 on the Dow, 7,400 on the S&P 500, NASDAQ 28. Again, this is all being driven by one small group of stocks. Energy and utilities are negative. Technology continuing to showcase the breakout moves. 81.27 on screamers on the Russell. This is starting to cool off a little bit. And the warnings are coming, again, largely on the back of oil prices. So that is something that we have to continue to monitor. So let's not get too ahead of ourselves. And let's start with the jobs report. So with the jobs report today, key things that we want to keep in mind as we dig into this. Good is the headline beat on the trend. Non-farm payrolls edging up 115,000 in April, page 1, right off the bat, right here. That's where you want to be focusing. And unemployment's holding steady at 4.3%. So no, we didn't have any deterioration month over month. Here's the issue, and I keep stressing this. What's actually driving the gains? It's healthcare. So 37,000 new jobs in healthcare. That's going to be down here in the bottom space in the establishment survey data. So just walk you through what you're looking for when you read this. Also, you're seeing a big pickup in transportation and warehousing. 30,000 in April, reflecting couriers and messengers, everybody. People moving products from building to building and to your house. Retail trade adding 20,000. Warehouse, clubs, super centers. It's kind of where the economy's moving. So we got to pay very close attention to that. Wages were up 6 cents to 37.41. Work week ticked up to 34.3. Manufacturing work weeks are up over 40 per 40 hours a week. March was actually revised up by 7,000. They do revisions on right around page 3. Let's see, where is that? Oh, it's right here. There we go. Revised up by 7,000. Asian unemployment dropped to 3.3%. And the diffusion index, which we've talked about in the past, right? You want to be above 50%. More industries are gaining than losing. Now, here's the bad stuff. The bad is that February was revised down. That went down 23,000. So we went down 133,000 to down 156,000. So combined for February and March, 16,000 jobs lower than we previously expected. The federal government keeps losing jobs, 9,000 in April, so down 350,000 since October 2024, which was the peak. Information sector losing 13,000. That's now down 342,000 since November 2020. And what happened in November 2020 or around that time? That's when ChatGPT launched. So the information sector continuing to bleed. Transportation and warehousing continues to stay down since the peak. And the labor force participation rate, and this is the thing that I really care about, that has fallen to 61.8%. So the employment population ratio has moved to 59% over the last year. The civilian workforce is down 92,000, manufacturing down. All right, let's get to a couple more things, and then we're going to dive into the SpaceX IPO. These are the things that when you revise this and you really look at some of the stuff that's kind of in the tables that I want to always be looking for. The first thing we want to look for is jobless, people who are jobless less than 5 weeks. Okay. This went up by 358,000 to 2.5 million people in a single month. Joblessness. That is a wave of fresh layoffs that the headline number is hiding. And that's important. This is going to be in page 4. It's going to be in a little paragraph known as less than 5 weeks now. There you go. The number of people jobless less than 5 weeks increasing by 358 to 2.5 million. Okay. Part-time economic reasons spiked to 4.9 million. So more people want work, but had their hours cut or can't find a job. That's going to be in the same summary table on page 4. Down in this range, duration of employment, people working part-time for what number of reasons? Slack work, business conditions. Federal furloughed workers were counted as employed, which is insane, but this is one of the things they do. So during the partial government shutdown, furloughed federal employees were counted as employed by the establishment survey because they worked or received pay for the period. Great. October 2025 data actually never collected at all to the federal government shutdown. So that's a huge hole in the time series. And less than high school unemployment rate has increased from about 5.9% to 6.4%. That's going to be right here in the dead center, the unemployment rates. So once again, we're seeing the gaps based on race and class structure in the U.S. Teen unemployment, 14.4%. Increasing as well. New entrants to employment has increased by 100,000, 90,000. Fresh job seekers who can't find work. And once again, there's going to be a lot of these people who are coming and looking for work because they're getting out of colleges now. So the very important thing to keep in mind, right? This is where I want you to just focus for today when you hear about the jobs report. The $115,000 headline looks fine. Underneath it, about a 350,000 surge in newly unemployed people. A 445,000 surge in involuntary part-timers, a shrinking labor force, downward February conditions, a falling information sector, and a month of missing data from the shutdown. The good news is concentrated in headlines in healthcare and retail, almost everything else is wobbling. The headline numbers is what the market will trade. We know that, and we just got to continue to position ourselves as we have to. All right. Here's my question for you as we start the day, and we're going to go 7 minutes on this, and I'm just going to say it. SpaceX, a couple of years ago, I did a report, and I wrote about Snapchat, and I wrote about how Snapchat, I investigated it. Snapchat, which, by the way, is trading at 6 still. The company had changed rules, as did a lot of other tech companies, to ensure that their executives remained in power in perpetuity. So rules were changed, Class A, Class B, Class C shares. And ultimately what happened was I interviewed people at CalPERS, the pension system in California, and they were pissed. And they were pissed that they had to buy this thing because it was going to index and because they had no opportunity at any point to actually try to change governance. This is Snapchat, not just on acid, not just on mushrooms, pick a hallucinogen, strap a rocket fuel to the back and push it all the way into space and let it just run all the way to Pluto. This is nuts. And I'm just going to point this out. I don't understand at all what is going on anymore. I really don't, because this right here is one of the, if you hear me complain or blather about how market incentives are created and how things are structured. This SpaceX IPO is absolutely the embodiment of all of the things that people are suspicious about in markets, but also can't explain. So let me walk you through this because Veronica's pointing this out. All right. SpaceX made early inclusion in the NASDAQ a 100 a condition to even do the IPO with the NASDAQ and to list with the NASDAQ. They said we're not going to do it unless we're included. Okay. Usually you had to wait. You had to wait. NASDAQ approved a rule change allowing new mega cap companies to join the index after just 15 days of trading instead of waiting 90 days. And the S&P 500, the Dow Jones indices, proposed removing its, love this, profitability requirement for large IPOs seeking admission to the S&P 500. 9 space-related ETFs have launched or filed in the last 3 months, and one of them has already changed their methodology so that SpaceX can qualify on the first day of trading. Okay. I have talked about passive investing flows. 50% of the market, about 50% of it. I mean, look at how many ETFs own Apple, Amazon, Google. That is that passive flow, that reflexivity that we've discussed. Every $1 in passive flows, creating a 5x multiplier, according to the theory. Every fund that tracks the NASDAQ has to buy this. Okay? Everybody. So on day one, if they're in, they're going to have to adjust over, I don't know, a 2 to 4 week period, right? All right. Every fund and the S&P 500 must hold stocks in those industries in proportion, here's the next one, to their weight, not to the weight in the S&P, in the weight to the NASDAQ, okay? Now, if SpaceX enters the NASDAQ 100 at a $2 trillion market capitalization, guess what happens? Everybody has to buy it at that weight, and it immediately ranks in the top 7 or 8 names in the S&P 500. Passive funds controlling trillions in retirement and retail dollars have to buy the shares, regardless of price. They have to chase it, regardless of fundamentals. Who cares? $2 trillion, everybody. $2 trillion, and it's just going to get better and better as I continue to go with this. They don't get a choice. The index says buy, they have to buy. $2 trillion valuation, but here's the thing, it's 15 billion in revenue. It's trading at 100x. And by the way, only 5% of the stock will float, much like Aramco did when they went public. So Tesla's trading at 15 times sales. SpaceX would trade at 7 times Tesla's multiple. 5% of the trades, but full market capitalization sets the index weight, math forcing buying into that tiny pool. And the American Federation of Teachers, they came out and they said this valuation defies financial logic. 1.8 million workers, $3 trillion in retail assets, and they're asking the SEC to scrutinize. And who are we kidding? They're not going to scrutinize. This is just going to happen. SpaceX is a dual class structure. Class B shares get 10 votes for every 1 Class A share available to the public. Class B is not available to the public. So this gives Musk more than 50% of the voting power after the IPO. He controls the board, the mergers, and I believe I've read this right. Shareholders waive all rights to jury trials. No class action lawsuits allowed against the company, its directors, its officers, or the banks that underwrite the IPO. Mandatory arbitration, and the SpaceX Incorporated in Texas shareholders need to own at least $1 million in stock or 3% of the company to force a vote on a proposal. One corporate governance expert called it unprecedented. He said it closed the voting door, the courthouse door, and the proposal door simultaneously. Once again, they rewrote the rules for inclusion. Once again, the NASDAQ approved. Once again, the ETF shift. Once again, if SpaceX enters at $2 trillion, it ranks in the top. Passive funds controlling trillions in retirement money have to buy this regardless of valuation. They don't get a choice. This is Musk's government's numbers, according to Reuters. 42.5 equity, nearly 84% voting control. Power to elect, remove any board vacancy, control M&A, including the Tesla merger. Once again, people are saying, well, what's going to benefit? They're probably going to buy Tesla, right? And that's just going to go through. This is absolutely wild. Now, here's the other part of this. The public float's 5%. Here's the other part of this. This IPO is launching into the market conditions that we are in right now. And this is where it just can go parabolic. And this is why I say that this feels like when we, are looking on the backside of whatever the liquidity cycle is in 2 years, there's a very good rationale to say, yeah, this might have been the top. Okay. Volatility collapsing, the VIX, the MOVE, and the CVIX, currency volatility, bond volatility, equity volatility, all down at the same time, a macro regime signal. We went through this earlier this week. Volatility funds have been forced to lever up as the VIX has pulled back. So they're buying more and they're pushing higher. Passive flows, we talked about what capital flows talked about the other day. The idea of $1 in index flow lifts the market $5. That concentrates into the top names. And this money is going to concentrate again into SpaceX. The CTAs are at all-time highs. They're max long everything. The carry trades are at extremes. Quality is crushing junk. Safety is being punished. The melt-up is structural. And you throw this grenade where everybody has to buy it. Imagine what an environment that is where you literally walk in with a public company and everybody has to be a shareholder through the passive door and everywhere else. This is absolutely wild to watch. And all I can say now is remember, if that money is now having to go into the NASDAQ 100 and the S&P 500 funds and they have to buy this equity, where does the money come from? It comes at the expense of everybody else in the index. The weight has changed. So the weight in the S&P 500, you either need more liquidity, more capital, right? You need everything to come in and then the weights kind of hold and then basically the valuations remain the same. The weights shift, but the stocks and the companies aren't impacted if liquidity, if all capital, if the reservoir increases. But if the reservoir remains the same or the amount of liquidity drains, everything gets hit at the same time. Now, the market is obviously going to start to price this in accordingly in the coming months, but this to me just feels like the peak insanity. This is a test for the index industrial complex. 100x revenue multiple, 5% float, rules rewritten to accommodate, passive flows forced to buy, volatility CTAs, odd carry trades, already at extreme. Every structural level is pointed in the same direction. The buying pressure after the listing will be real and structural, and it'll probably work. And a lot of us thought that, this is kind of the game plan for strategy as well. That when strategy kind of pushed into the NASDAQ, they would over time create kind of a loop effect that would allow them to rise very quickly. This is just showing up at the party and saying, hey guys, we're worth $2 trillion. Start buying. That's where we are. And remember, it will be indiscriminate in terms of price. They all have to buy. So that first day, if you're not trading volume weighted average price with Tesla, or forgive me, with SpaceX, I don't know what you're doing because this thing can be absolutely wild the first couple of days as we see the passive flows start to mix in, as we start to see profit take. I mean, this is going to be the trading event of the year. The language of the market top remains the same. If this structure works, every other group in AI is going to copy this. Anthropic, OpenAI, these massive valuations, the super voting, the forced arbitration, the index fast tracking. The thing about this, and I don't get self-righteous about markets, but I will say this. If you want to come to the public market, you should be held accountable by the public market. If not, just stay public, just stay private. Nobody cares. But the reality is that the point of a public market is the accountability, the management. So this is a new level of extraction. This is a new level of walking in and the SEC just basically saying, yeah, it's good for America. Is it? We're going to find out. This is the language of a market top, not because SpaceX is a bad company, but because the structure around it is extreme. There's really no accountability to this. And yeah, a lot of people are going to make a lot of money. And if that's where we are, great. That's just who we are. But if there isn't a mechanism, and the market was supposed to provide a mechanism for accountability and honesty and transparency and a legal system that is built on the back of it, then what are we doing? That's all I'm going to say. I mean, I'm just pointing it down the middle. I find it wild. I just find it absolutely wild. All right. We went through the jobs report. Okay. Yeah. You can't get, well, right. You're all right. We got to get to $1 trillion. Yeah. The AOC said the other day, no one earns $1 billion. Yeah, nobody gets there if the government doesn't print trillions, though. So we're going to be printing quadrillions, and we're going to have a whole trillionaire class at some point, and we're going to wonder what happened. Payrolls, we talked about, they beat the number, the 4.3 number. I'm not trying to complain. I'm not making any political statements. I just find this whole thing to be mechanically insane. And obviously, there are going to be ways to trade it and to profit off of it, and I'm all for that. But once again, I am a firm believer in free markets, accountable markets. They matter. Fed custody holding 9 points. Forgive me. Japan is selling our treasuries. Didn't know if you noticed that. Their custody holdings at the Fed fell about 8.7 billion to 2.3 trillion. Japan has spent an estimated 54 billion defending the yen. The Bank of America funding came in from bond sales, $70 billion in new treasury supply hitting the market. Okay. Japan's selling, more supply, yields rise, move rises, liquidity tightens. That's typically been the pattern. That is what the opposite of what the Treasury QE is trying to do. It's heading to Tokyo Monday. We'll see what they do, what type of rabbit they pull out of the hat. But once again, Japan has intervened. And it is just a reminder that the last time that they did at scale was back in August of 2024, July of 2024. Gamma squeeze and payrolls would pull back, reversed overnight. Futures up, dollar weaker, gold and silver higher. April payrolls we already covered. S&P traded $2.6 trillion in notional call volume yesterday, an all-time record. The SPY on the RSI at 74, the NASDAQ at RSI, so we're overbought already. The Russell's the only one that is not. Treasury and Fed, $25 billion a month, keeping all of this together, right? So they're going to continue to provide support to the system. If we see a resolution on a lot of this stuff, metals are the trade. Tether bought $23.6 million of gold.com, and oil floor up $22 from the start of the year. WTI won't drop below 78, likely without a deal. What are we watching? We're watching new breakouts in ACAM, Manpower, Block, and First Solar and IQV, seeing a $2 billion buyback. On triples, the things that were confirmed: VTRS, CNC, Humana, CVS, and DaVita, all healthcare right now. And a lot of insider buying, big insider purchasing at GE Healthcare happened. The FAZ is back above its 20-day moving average. Private credit is unresolved. And Golub, Golub, probably pronounced that wrong, is actually gating their redemptions again. Once again, reminder that private credit has not gone away. FNGD just continues to get crushed. That again is showcasing that leverage is still in the system. We have weak conviction on Bro, Aon, Marsh, WTW, and AIG. Tokenization plays are cheap. BRO and Willis Towers have had significant insider buying, and the cap weight pulse is extreme, obviously driven by small number of stocks. The SOXL has gone to the moon. On a market outlook, key things to pay attention to today: 4.4% on the 10-year, 30-year near 5%. We have the payroll numbers. Oil has rebounded. The U.S. destroyers fired in the Strait of Hormuz. The IEA is saying that we are losing 14 million barrels per day from the war. Bessent met with state insurance regulators over private credit exposure. We have no idea what that conversation was about, but it is a reminder that a lot of those private equity companies have been buying life insurance companies. Golub gating nearly $10 billion. That is the latest manager to limit redemptions. Kashkari has suggested in the Minneapolis Federal Reserve that a rate hike is possible if Hormuz stays closed. The airlines are cutting flights. Delta has flagged $2 billion in a Q2 fuel hit, and Coinbase just missed, down 6%. Key things, once again, the momentum bending but not breaking after 3 straight record closes. The pulse dropped to minus 66 during the session. This morning were positive. Selling lasted one day. 133 names were in breakout versus breakdown. The anchor is not as clear, right? The cap weight remains the primary driver and the anchor hasn't flinched. The NASDAQ is weathered the best and the Russell has held. So once again, anchors are strong enough to absorb a miss. If payrolls come in hot, we're going to see what happens here. There still is room to run. Insider buying to selling remains weak. Nothing significant there. We did see some buying in gold.com, obviously, and GE Healthcare this morning. GEHC is the ticker. We're going to look for a trade there either today or next week over an insider buying report. Is the labor market strong enough to force a conversation Treasury doesn't want to have? It looks like today on the headline number, yes. But if you look at the undercurrent of this market, I still argue no, this is a weak economy in terms of, or a weakening jobs market. Just you have to look at the underlying data. So the music is still playing, but we have to dance next to the door. And that's how I will call it for today. All right. AOC will be a cute president. We're moving in that direction, aren't we? Yeah, it feels like the money printer will be running 24/7. They are going to move at some point, I promise you, to a 24/7 equity system. They're going to do it because we don't get a say in it. Just pointing that out. If there's money to be made, they're going to create it. All right. Sorry, Steve. I don't mean to scare you. It's just how the markets work. SoFi, looking and seeing what kind of questions we got. I'm going to wrap it at 9, guys. 4:00, guys and girls. Got to wrap it at 4:00. I'm opening a position in AIPO. Didn't we do that yesterday? Didn't we talk about it? I thought we did. I mean, for the long term, this is one of the primary theses, right? The power and the infrastructure and everything associated with it. And you've got a lot of names here, right? Particularly a lot of names that we like out of the Fervo stuff of the world. I mean, GE Vernova was one of the best calls of the last 2 years that I think we've had. This thing just went manic back during the time that we were out in Utah. So the thing that I I I like this stuff, but to be honest with you, I think you're better off finding the best companies and just sticking with the best companies, because I think when you look at some of these ETFs and the way that things are structured, you're ultimately going to continue to look for the concentration of contracts and just certain companies getting access to to things, to getting access to contracts, and this industry is very likely going to consolidate. All right, chart party tomorrow. That's right. Who is at my house? Well, now we definitely have to wrap it up, everybody. Can you explain what people mean? What? Yeah. So Matt, um, the the view of the world when a man loves a woman, um, they I have a basset pit and a beagle chihuahua. All right. When a man loves a woman. Sorry, I went fast, guys. Watch the video yesterday where I'm eating crabs and explaining the Treasury Department. I really slowed down when I did that. Maybe I should just do that all the time. All right. When a man loves a woman, the Federal Reserve manages the dual mandate, right? The idea that we are going to have inflation and a strong jobs report, a job market. Those two things counterbalance, because if inflation runs hot, interest rates should go up. That impacts borrowing, that impacts credit, business credit, impacts hiring. We run a perpetually loose monetary policy, and we've done that since the 1990s. We did it since the fall of the Berlin Wall, the rise of China, and the e-commerce boom that started in the 90s, all big deflationary events. The Fed runs a 2% target rate on inflation. What they try to do is manage it through one tool, interest rates. You raise the Fed funds rate, you lower the Fed funds rate. The problem, unfortunately, is that doesn't matter. It doesn't matter anymore. We continue to operate in the financial media on the assumption that the Fed's rate decision is really what impacts markets. It's not. It's the SOFR, which is the rewiring in the financial system after 2008. But the statement that it's going to impact, test the market is going to test the Fed, or the Fed would, however you want to define it. The reality is that they're trying to utilize inflation, the Fed managing it through the Fed, the IORB, right? The reserve Fed funds rate. That Fed funds rate spills through to everything else, reportedly. But the reality is that, okay, if the market runs hot, surprisingly, the market runs hot, that's inflationary. Did you People don't think about that. Market runs to all-time highs. People who have retirement accounts, people who have, made big gains in the equity system, they have more money that they can now use to do whatever they want to do. And this is one of the reasons why the top 10% of the United States drive like 50% of consumer spending. This narrative, though, of the market is going to test the Fed, I don't think matters anymore. I think that it really goes back to an antiquated view of markets that is still locked up in CFA documents and MBA courses, and the media is still saying things like the PPI rate is the wholesale rate. It hasn't been the wholesale inflation level since 1978, and yet they still say it. It's because we just have built a system that has people have not recognized that things have changed. So the thing that I just want to state is I ignore that narrative. I think it's foolish. I don't think that it really takes the time to really understand how the plumbing of the financial system actually operates anymore. We're seeing another rewiring happening right now. We're seeing perpetually loose economic conditions. And we have run perpetually loose economic conditions for a while. And the reality is, if we do raise rates, if we do try to tame our inflation, that creates problems elsewhere around the globe. It created problems in 1994. It created the long-term capital management problem. It created issues, contributing to the Asia crisis. Obviously, 2008. Obviously, the gilt crisis and the implosion of Sri Lanka in 2022. The Federal Reserve, as the manager of the world reserve currency, if they have to take extreme measures, they impact not just the United States, but also everybody else internationally. So there's a lot that I just said. I'm going to get some coffee, and I'm going to try to wrap my head around how, once again, if this SpaceX IPO goes through and the market hits all-time highs, people will say, wow, what an incredible business. And the reality is that it will be the result of massive financial underwinds, massive changes that otherwise wouldn't have happened 30 years ago. This is the structure of the market now. And this is why it's very important for us to just understand how all of this works, because when this does flip and go the other way, it will be fast. The sell-offs will be fast. And that's why we do what we do, and we watch these signals. On the trading view, this is volume weighted average price. There is your market, right? Key thing that I want you to focus on today is, remember, you had a lot of companies that were reporting earnings. You have weekly options that are expiring. You have companies coming in with different figures, and you want to watch maybe XYZ, right? Got Block. Talked a little bit about Block today. There's your pop on Block, right? Pop on Block. That sounds like a Dr. Seuss book. Pop on Block. I should write that. Okay. Volume weighted average price. Here is deviation bands, right? And then you have your Bollinger Bands. Look for some reaction today. And if you get outside that Bollinger Band and you get outside that volume weighted average price, or down here, what you're looking for all of those companies that were reporting, and of course, all of the big names, the Apples, the Amazons, things that are highly liquid, expiring today, you're looking for moves down here. You're looking for moves outside, and you're looking for a reversion up. We are in an environment where profit taking is going to be done, and you want to take advantage by focusing on the extremes or trading around that key level. What's the way I choose a screamer? Or should I go to the launch pad? Okay. Just go to the launch pad. So same thing. I mean, take these names, for example, GBX. A lot of these names are going to be, we'll have some options. Sunoco, they're fueling. Here's what launched. And look to trade around these specific names. Zoom's a great name to trade, by the way. Right. So Zoom, as we can see, we've had some moves, not, overwhelming moves, but take a look at what happens as this touches volume weighted average price and pushes down out of the Bollinger Band and then squeezes back up. This doesn't seem like a huge move, but 107 to 108.40 on a day that an options expires, that can be a 10, 15, 20% gain very quickly. So these are names that you could trade as well. Pull them up from the launch pad, look at them on VWAP as well. Or again, if you're buying some of these names that are just pushing above that 8 and 20 day, you just set a 2% stop and you let the market do the rest. All right, everybody. I went over as I said that I wouldn't, but that's how it works. I will run the transcript in about 15 minutes. This will be published. You'll get an email. And I hope you all have a great day. You know where I am if you have any questions. We're going to start talking about tokenization. We have a couple other things that are going to be going on in the next couple of months. And then obviously my focus will now start to be on the SpaceX IPO because this is something. I hope everybody has a great day. We'll catch up. Take care. And of course, stay positive.